Okay, everyone. So we're still in this range and we're just seeing what Bitcoin's going to do next. We're being patient, we're waiting to see exactly, Bitcoin's next hand. So just to give you an idea of, what's transpired in this range, as we wait, we may as well, decipher what's actually happened. We've got this 4-hour uptrend in green. We have a 4-hour high, low, high. It's set our range high, and it's then subsequently left a range low over here. Okay, so all of this price action would be our 4-hour internal range. If we go down to the 30 minutes in pink, in the 30 minutes we've got high, low. We have a high again, and again within that 30 minutes we have that 30-minute range, over here. All right. So in terms of the internal aspects of this range, we've had a markdown, and we've sort of, had, I would say, a dance between Bitcoin playing with the supply zones, playing with the demand zones, breaking the structure momentarily, and then reversing and breaking the structure again. So there's been, it's been a decent range to trade, but it's been quite unpredictable, I would say. So just to give you an idea of what's happened, we've had, in terms of our range internally, we've had a mark down, we've had a mark up, we've had a mark down, and we've broken the structure bullish, and then after that we've broken the structure bearish. We've continued that for another mark down, and we've broken the structure bullishly. We've set higher highs and higher lows. We've put a first tap of our 3-tap model. We've then broken the structure bearish, and then we've tried to retest that high. We didn't quite make it. We SFP'd that high, or we pump faked that high. Basically, we didn't close above the high, which created a weak targeted low. This meant this would be a weak targeted low. So we then marked down, all right, hoping we were going to break that low. But did we break it? No, we didn't break that low. We wicked on that low, which made this a weak targeted high. Okay, so what did we do? We rotated to that high. We tagged this 15-minute supply, okay, and that 15-minute supply created a juice again with another weak targeted high. Sorry, another pump fake / SFP, creating a weak targeted low again. So here you've got the W's that I've used to signify the weak targeted low and high. So we've marked down. So this is where we are at the moment, and at the minute we're just within this, local range. We've got the wider range in green, and we're within this local range, and we've marked up. We've touched this 12-minute supply, okay, and Bitcoin has just reacted off that zone. Of course, you could have entered a trade, I would say, here. You could have entered a trade here. You definitely could have entered a trade here, because this was an easy range play. Okay, so at the moment we're sort of seeing what is Bitcoin going to do next. What are the options? Well, we're in this range. We're in this 4-hour range. And what do we know about 4-hour ranges? What do we know about ranges in general? You can either break out or you can break down. So in the case we break out, we're looking to enter those retracements. And in the case that we do not break out, we're looking to get a reaction of the top of the range for the premium short, and a long of the bottom of the range, for a discount long. Okay. So that's what's going on at the moment. Now, what do I want to show you? Well, I just kind of want to talk you through what our potential plays may be. Bitcoin has left a 15-minute demand over here. So there is a potential that within this internal range, there is a potential that, we mark down to collect that juice. After we get the juice, we go up to retest that range high. There is that option. In the case we go straight for that range high and, we don't collect the juice first, we need to be looking at that level for a potential reaction. Apart from that, there's not much, to look at as far as high probability plays go. I'm sure you can walk into, you can open any app, you can go to your broker, etc. I'm sure you can place a long and a short at any given moment, right? You've got a 50% chance of your trade being successful. But if you're looking for high probability plays that stack the probabilities in your favor, that give you that edge, to toss it just above 50-50, you're looking at these levels, the range low and the range high. Potentially this zone, it's worth also noting at the moment is that this trade up here, all right, is confluent with our with our range. What do I mean it's confluent with our range? Let's take a range pool, a fixed range pool. And what does a fixed range pool does? It measures the volume traded of the asset at given price levels. So it's not measuring the volumes with time, it's actually measuring the volumes at those prices. So what we can see here, if we pull out our fixed range, we've got a value area high, a POC, and a value area low. We can see that we seem to be getting a bounce off that POC. But what is important here, we can see here that below our value area low, we've got a 15-minute demand zone right beneath it. So will Bitcoin say, do you know what I'm going to do is I'm going to mark down, I'm going to touch that zone, yeah, and then I'm going to get acceptance back into the value area. Is that what it's going to do, because this is, heavy confluence, I would say. Now, in terms of our value area high, above that, we do have a very, 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 very small 1 minute supply, up here. I wouldn't recommend trading 1 minute supplies, but I've just drawn it out there and I've put a question mark just to see what's price going to do as we approach that level. Okay, as we can see, we obviously got the reaction of that 12-minute supply. And do we have a case where we've got supply creating more supply as we have had in the past? I think we had 2 occasions of that last week. So let's see what happens as price approaches this value area high and as price approaches this value area low. And let's just watch out to see what the reaction might be. Okay, there is one more thing I want to show you guys. And it's quite an interesting one. I posted about this yesterday. I haven't quite named it yet, but it's kind of looking at the symmetrical triangle that potentially forms within a bull leg or bear leg, or perhaps a bull flag or a bear flag. Okay, and what does that look like? Well, if we look on this chart, perhaps let's go on a 4 hour. If we look on this chart, so I've removed all my other drawings. What we have, coming out here on a 4 hour is we've got a clear, bear leg. Okay, we've got our bear leg, and what we have inside that leg is we have a potential triangle forming. We've got the trend lines at the top, and then we've got the trend lines at the bottom. What do we know about triangles? Well, they're going to break up or they're going to break down. And where are they going to go when they break up or down? In the case they break up or down, we can realize the target by drawing the difference between the trend lines and putting them at the bottom or putting them at the top. Okay, I'm not saying trade the break. I'm saying trade the break failure. Okay, so what does that look like? In the case we break up, we're going to move up there. In the case we break down, we're going to trend down here. Now, it so happens, this is where it gets interesting. It so happens that the target of this triangle is confluent. Well, let's draw 2 triangles. Let's draw two targets. So we've got a bull target and a bear target. It so happens that the target of this play is highly confluent with our fib zone. What do I mean by that? Well, if we take our fib pool from the high to the low, okay, and we stretch that across, we can see that in the bull scenario, the target is coming within that fib zone. So that's an area you need to set an alert just to see what is price going to do as I get there. Am I going to get a change in market structure there? Is market cipher going to print, that coveted bearish divergence? What about in the case we break down? Well, in the case we break down, let's look at what the fib's doing. If we take a fib from the low to the high, we stretch that across. Aha, look at that. We have the target of our triangle coming in within that fib zone. Okay, so that's fib zone number 1 and fib zone number 2. So this would be a juicy region to look for a short. Okay, so what am I going to do? I'm going to put a potential short there. As it is a fib zone, I'm going to cover all of that with my stop loss, but of course that's not going to be my actual stop loss in the trade. And And for the long, I'm going to do the exact same thing. Okay, so I'm looking to long or short the failure of the target. Okay, this is a great way, to track a lot of traders, because I'm sure most people that are looking for the breakout, they will think, right, price is going all the way up now, or people looking for the bear breakout are saying price is going all the way down, but that's not necessarily the case. And we've seen Bitcoin do this time and time again. So I just wanted to show you that. To summarize, we're looking at this, triangular failure, and we're looking for our constant levels, which we've already talked about, which is a reaction from this 4-hour range, bull or bear. In the case we break out of the 4-hour range, we're looking to enter on the retracement. So there you have it. If you like this content and if you found this useful in planning your trades and just giving you a clearer perspective of what the price action is doing, feel free to follow for more price action like this. I'll see you tomorrow.